Hey everyone, it is Evan here from the Trade Risk on Friday, June 8th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So we're going to jump right into the charts here with the S&P 500 cash market weekly time frame. Each bar represents 1 week worth of trading on this chart, and we can see the performance this week for the S&P 500 closed right at the week's highs. 44 handles to the upside, 1.62% of progress in the bull case. Now, importantly here in the S&P 500, what we got this week was a nice breakout of this 3.5 week trading range that we were in between about 2,700 to 2,740. We resolved that to the upside and finished the week strong at the highs. So a great continuation here on the longer term time frame, this weekly time frame. We've got a little bit of momentum building now. If we look simply at the fast moving averages on this chart, so the blue line and the yellow line, 8 period and the 20 period weekly moving averages, and are starting to expand away from each other. Price is above both. Therefore, we have some increasing momentum there on this weekly time frame. So looking ahead, on the upside, we have this nice round 2,800 level. That is where we topped out in March. That was the immediate sort of correction high here back in March. So in other words, when the market took this tumble from all-time highs all the way down to 2,550, 2,540, we did get a rebound bounce. So this first initial bounce, we got all the way up to 2,800. That's when the second leg started to the downside. And then we have since been kind of grinding higher, going back towards this 2,800 level. So that's what we're going to pay attention to. That is where the market filled in March. And we really haven't been able to get above there since just the first couple of weeks of trading in January, when we were kind of climbing higher here before the selling wave hit at the end of January into February. So intermediate term weekly chart here looks good, looks strong, progress to the upside. Bulls starting to get some upside momentum in their favor. 2,740 would be the level I want to see us hold above. Now, if we go down to the daily chart and we look at the SPY ETF here, you can see just a little more day-to-day action of what's going on here. So this is the daily chart, and you can see this week started right here. Monday is when we got that follow-through breakout and resolve of this range. We did a little bit of a stutter step here on Tuesday, kind of keeping the bulls honest. Didn't really get a nice follow-through strong day, but that did come on Wednesday when we really kind of pushed away from this level, almost 1% rally, and then we ended up finishing the week here near the highs, right above the 8 period EMA, which is expanding away from the 20 period. So even on the daily chart, we got some expansion in momentum here to the upside, bullish alignment. So the trend is firmly kind of in the bulls' favor here on the daily chart as well. So kind of got that multiple time frame bullish alignment going on, and the sort of more of the higher level takeaway from this week here when thinking about the S&P 500 is we really did get kind of a rotation week this week, where the old kind of leadership group, or what's been moving this market higher over the past month or so, has really been semiconductors, technology has been strong, small caps have been strong, and it's really been the Dow Jones and the S&P which have been lagging a bit. And we saw the exact kind of opposite. We saw rotation this week where the Dow Jones was the biggest index gainer this week. So the Dow Jones on the week was up 2.8%. Second in lead here was the S&P 500 by 1.68%. Then it was the Russell 2000, 1.64%, and the NASDAQ, which had been, again, the recent kind of bright spot here in the market, did underperform on a relative basis just on this week, up 98 basis points, so almost 1%. Still, again, I'm not criticizing the advance here necessarily in the NASDAQ. I think a 1% gain is certainly a bullish development, but clearly you can see the Dow Jones and the S&P 500 clearly had some nice rotational efforts in their favor. We'll talk more about that at the end of this video when we get into the individual sector analysis. So finishing up the S&P 500, the SPY ETF here, essentially going forward, I'm going to be very interested in this 279 to 280 and change zone. This is, again, where we topped out back in February and March of earlier this year. So we saw this pivot right here, right around going into 279, very close to where we are now, but just about $1 or so above price. And then the ultimate kind of swing high was right above 280 and 41 cents. So essentially this 1 point zone that we're just kind of rallying into now, we're going to be wanting to pay attention to see how the market reacts at this level. If we can start to break through there, then, you know, there's really not a whole lot stopping us from retesting those highs. I do want to say, you know, this market, though, it's really this 274 level now that I want to see us hold above. That's where the majority of supply has traded. So if we just kind of stretch back this rectangular zone where we chopped around for 3.5 weeks and throughout the whole month of May, that is where a lot of supply was traded back here in February and a little bit in March here. And now that we are, again, above that zone, I do want to, you know, give the benefit of the doubt to the bulls. If we see some type of drop back below 274, back into this range and falling back to these levels, that's when I would start to become a little more at least neutral, or you know, kind of foot off the pedal to the upside, and just want to really see how the market digests that if we come slamming back down into this 274 level. And then the other thing I'd just be on the lookout for is if we did see some type of exhaustion bar up here next week, maybe a gap up and a push up into 280, followed by some type of late day reversal on volume, you know, some type of climactic sort of capitulation to the upside there. That's also something that I would be paying attention to as a short-term sort of tradable top signal, or, you know, however you want to manage it, tighten up the stops, reduce position size, so on and so forth. So that's kind of really the goalposts, the levels I'm looking at into next week for the S&P 500. Nice development here, though. Nice strength overall. The Russell 2000, again, still made good progress here to the upside. If we look at that weekly chart, you can see expanding, following through above last week's sort of almost a bullish engulfing weekly bar here, and then just continuing higher. No overhead supply. Looks good. Momentum has just continued to expand here, and we look good in the Russell 2000 so long as we are holding above 160.50. That's the level, bigger level that I'd be paying attention to. That was the breakout level to new all-time highs just recently. And when we look at the NASDAQ 100 now, you can see a little bit more of a tail here on the top end. Again, I don't want to get too critical. It is still making progress to the upside. There's very little overhead supply here. But again, if we saw some type of abrupt sell-off, and if we saw, you know, some range expansion on heavy volume back down below, well, let me switch to my other board here, back down to below this 171 level, that's when I would again be a little more concerned, at least in the short term. But as long as we are trading above this 170.80, call it 171, I will remain constructive here and give the benefit of the doubt to the bulls. Maybe a little bit of digestion in the IWM Qs moving sideways, while the S&P and the Dow pick up some slack, I think would be perfectly reasonable. So that, I think, is really all I have to say about the market environment. Overall, again, bulls did put a good charge in there. Breadth remains strong. I'd say sentiment seems a little bit, again, very subjective kind of measure. You could look at the put-call ratio, which I know is falling back down to some maybe overly complacent levels, but it generally seems like there is a decent amount of complacency out there, or a lot of kind of bulls claiming victory here. And again, if the sentiment has tipped too much now to the upside, with a lot of confidence that this market is ready to just rip throughout the summertime, that's generally, you know, when you kind of get the rug pulls, or maybe at least some sideways, some sideways movement. Again, that's just my sort of subjective read on some of the sentiment and chatter that I see out there. So, you know, take from that what you will, but I do notice a little bit of froth there in terms of this recent rally. So that is the market environment. Let's get into some other major markets here. We'll go to TLT next, which which did fall this week, down 64 basis points. Basically, we saw yields kind of rise across the curve this week, and we saw bonds kind of trade lower this week as well. We did rally off of the lows of this week, so we didn't close right at the bottom here, but really, when we look at TLT, not a whole lot has changed in this macro picture. We're still, at best, moving sideways in this channel between, call it 117 and about 122 and change. So until we can really start to resolve that range, we're in the middle of it now. I'd expect just a little more chop if you want to play this range. If you're tactical, certainly by all means, but we're in the middle of it. Bulls are trying to defend this, maybe put in a higher low here. So we'll see if they can continue higher into next week. So TLT down just a bit on the week. If we go to oil next, you can see this was flat on the week after everything was said and done. It did finish off of the lows. We did probe down to about $13 even in the USO ETF, and we did get a small rally there. The 8 and 20 period exponential moving averages here on the daily chart are bearishly aligned, prices below them. So we did see some volume pick up on this pullback to the downside. So we still really kind of, need the bulls to prove themselves a bit here, try and stabilize price, reverse these moving averages, prove to us that the selling pressure is over. For now, kind of just sitting on my hands, not really very interested one way or the other in USO at this time, but we are clearly trying to hold the past breakout level that we just broke out of back in April, above 13 and a quarter, $13 or so. So that is oil. If we go to natural gas next, you can see on the week this was down 2.5%. It's had a pretty good rally over the past several weeks, but you can see it is definitely struggling a bit here, just moving sideways, kind of chopping around between 23 and a quarter and $24 here in the UNG ETF. Clearly, we do have some pretty well-defined short-term support now around this 23 and a quarter level. We got resistance right above $24. So short-term, I think we're going to be watching for the resolve of this range to see if the bulls can defend some of these moving averages here on the daily chart. And if they can't, if we do start to fall down below this support in here, then we're going to suddenly start to give back some of the rally throughout May, early May, and potentially fall back into this this channel, if you will, more choppy behavior, and give you some overhead supply to contend with. So it would be interesting to see how natural gas resolves this level here. Lots of gaps this week, making it a little bit difficult, and the short-term traders there trying to hold overnight. But we'll be watching this 23 and a quarter level, and then resistance up there north of 24. If we go to metals next, we got GLD, which is getting really tight in here, still trying to cling on to this trend line that extends from January of 2017. But you can see here, we're starting to also get the faster moving averages starting to move sideways, finally caught up with price. They were very bearishly aligned with this kind of momentum move to the downside throughout April and early May, and now we're trying to stabilize here. But we're going to really want to see gold take out some highs. Again, I've been calling to really look for this move above 124, 124.50. We'll have to see if that happens. Otherwise, risk is still potentially to the downside if we start breaking to new lows below 122. Silver, on the other hand, is starting to perk up. It is to the top end of this sideways channel it's been in for multiple months, and I know a lot of people like to look at that gold to silver ratio when silver is starting to expand to the upside. In other words, when that ratio starts to tip in silver's favor, that is generally a good environment for the metals to both rally in general anyway. So with the recent outperformance here in silver, 2.2% this week to the upside. Meanwhile, gold was 42 basis points to the upside. So if we continue to see that, and we see silver start to take out the $16 area or the top end of this sideways range, that does bode well. We did see some volume kind of come in here. So it'll be interesting to watch the resolve here. I got my eye on it. A little too aggressive for my style to jump in right here without enough confirmation. I think given the fact this has moved sideways for 4 months, 4 months. I don't think you have to rush an entry here. I mean, if you want to establish some type of small position, tier 1, whatever you want to call it, that makes sense. But I think, with a 4-month sideways channel, you got plenty of time to establish a position here if you do believe in a upside resolve and breakout. And if we can get that follow through above these highs next week, that's something you could consider for a trade idea. So that is metals, commodities. I think we covered everything. So let's jump into some of the individual sectors here. We'll sort this week's performance by sector, and what we can see is discretionary on the week here, 3.17% to the upside, leading the pack higher, and you can see taking out its prior highs here made back in January. So it is encouraging to see the discretionary ETF launching to new highs here. Volume wasn't anything that extraordinary for this type of move, but still from a price action structure basis here, this was grinding higher very slowly, and now we saw this real sort of extension into this week and rally to the upside. So nice move there for XLY, clear sailing above price right now. Materials also number 2 performer, just under 3% here on the week, and we did take out the highs from late April, early May, and we are climbing back towards the level seen right around February or January. We get a lot of supply in here right around 61.40 or so. Does seem like we are kind of beelining to retest old prior resistance from a few months ago up here right around 61.40 or so. You can see the 8 and 20 period weekly moving averages starting to cross over to the bullish alignment. So some good developments there in materials, slight uptick in volume, still kind of below that weekly average. And then finally with staples have been weak. It's been really just a sector of the market that's been crushed this year, and we did see a 2.36% gain this week, so trying to take out the past couple of weeks highs. Still looks like a potential vulnerable kind of bear flag formation here on the weekly chart, but nonetheless still some good progress there. If we go to the daily chart, you can see a couple of good volume days starting to clear above the past month's worth of trading, so it'll be interesting to see if we get a more pronounced sort of trend change here in the staples. For now, I think you can certainly participate there in the short term, but just be aware of the longer term time frame is still a path of least resistance lower. So those were the top 3, and really we'll talk about financials here as well, because these were the number 4, 2.18% to the upside. But what's notable about the financials, as we talked about it in the midweek video, is this was sort of the most vulnerable sector, in my opinion here, that would potentially lead us to the downside. And we did in fact get some nice kind of bullish move up above this $28 level. I mean, I wouldn't say it's out of the woods yet, but I say the longer it can hold and base above $28, the more constructive this range could potentially turn into. If you are pessimistic here, if you are looking at financials as potentially the way that this market ends up kind of rolling over, then this is the bigger range that you're going to want to pay attention to. We are back up to the upper end of it, so we want to see if this time is any different, if the bulls can actually manufacture some type of breakout higher. For now, it's yet to be seen, but a good week of performance, which did kind of help the S&P 500 and Dow Jones get that relative performance this week. So when we look at the downside now, we got XLU, which is kind of back in the doghouse. It really didn't leave the doghouse. It's really been kind of pummeled here for the past 4 or 5 months anyway, and we can see it starting to break back down. Almost got a new weekly closing low for the year, but this week right here, February the 9th, still has 48.56, the lowest close of the year. We're trading at 48.69 now, so only about 10 or 15 cents above it. So pretty vulnerable, breaking below supply here. Momentum has been to the downside. We're getting sort of distribution volume signs here with the sell bars coming on higher volume. So utilities really in a tough spot here. Tough to see the light at the end of the tunnel right now. I'd really like to see us back above 50, 51 or so to get a little more encouraging there. IBB, This was a top performer last week. Well, it spent this entire week really digesting gains. It didn't give a whole lot of progress back, though. It did chop around for sure. We had a couple of long tails, particularly even Monday. We traded all the way down to 107, but we did get a nice bid off of the lows, and then we really just chopped around for the rest of the week. So no forward progress, but didn't really give back a whole lot either. I'd be paying attention to about 108 or so. That was the breakout level. In fact, we had that we had a trade in this. We got long, I believe it was on the 30th, and we did capture some profit in here. I don't remember the specifics of the trade, but it was a long trade for us, so we got stopped out, I believe, the rest of the trade on Monday. So locked in some gains there. And then finally, energy was the third on the bottom this week, 68 basis points, a little over 0.5% gain to the upside this week. And we can see here, looking at the weekly time frame, we do have this clear kind of double top that's in play right around $78 all the way up to $79. We stretched, but this is kind of the level, the area that we're going to want to see energy break out above if we're going to see more continuation here. It did get this violent kind of reversal week back here on the final week of May, and then it did stabilize, and it's trying to rally back up. So I think this will be an interesting interesting market in play here, interesting test for energy specifically, and even the S&P 500 and some of the impact it has on those major averages. So that is the weekly recap. I've been kind of out of the loop a little bit this week, or I've just been kind of busy running around with some family in town, and I really haven't got many updates out, but I did get our midweek video. I got this video out, so hopefully this is helpful for you. Hopefully you had a good week worth of trading, and thanks so much, as always, for watching, especially if you get this far. Do subscribe to our YouTube channel if you like these videos every Tuesday and Friday. So with that, let's end with some important updates pending. Thanks again for watching, and I will talk to you on Monday.